The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe. I'm Steve Sedgwick with Juliana Tattlebaum. Good morning, good to be back. And Ritika, well, she drew the straw that sends you to Liverpool for the Labour Party conference. Is short or long? I'll let you decide. These are your headlines.
UK Prime Minister Keir Starmer will tell the Labour Party conference here in Liverpool today that economic growth is key to uniting the country. Hot off the heels of Chancellor Rachel Reeves' warning against the prospect of a reform UK government led by Nigel Farage.
There are still people who peddle the idea that we could just abandon economic responsibility, cast off any constraints on spending. They are wrong. Dangerously so.
The US Vice President J.D. Vance warning the government is heading for a shutdown after talks between Donald Trump and Democrat leaders fail. But investors once again appearing to brush it off, with Wall Street closing higher yet again.
And the U.S., with the backing of Israel, unveils plans to end the war in Gaza, putting the onus on Hamas, with the group yet to respond.
I have a feeling that we're going to have a positive answer. But if not, as you know, baby, you'd have our full backing to do what you would have to do.
A very good morning to you. How are you?
Nice to be back together.
It's lovely to see you. I don't want to talk about my weekend exploits the whole show because we've got a lot of news, okay? So just don't keep asking me about it.
Well, I did notice straight away your gait was a little off this morning.
Just, I don't want to talk about it. I've got UK GDP, but let's just not talk about my physical exercise this weekend. I don't want everyone to go on about it, about my personal best and all that. Anyway, UK GDP. Good morning, everyone. Look, I'll tell you what, I'll call it when I see it. And I think this, in one part, is a way better figure. It's not great. A way better figure than some people had expected. And you got the figure at the bottom there. That's dull. I mean, it's what expected. Up 0.3%. It's a bit, as the technical term is, ishmish. You know, I mean, come on, we're up 0.3% quarter on quarter. The preliminary was up 0.3% quarter on quarter for the second quarter. Final GDP out of the United Kingdom. Some of you just listened to this. I should tell you what figure I'm looking at. Second quarter final GDP. Why am I looking at this? Because the pressure is on that lady we had in the headlines. No, not Ritika. I'm talking about Rachel Reeves. But one figure I think is way better, if this is accurate, and I think it is that UK business investment was only, all right, it's not great, is it? Only down 1.1%. The previous estimate was for negative 4%. So I'm going to call it. That is a better figure than expected. The second quarter business investment on the year up 3%. Every decent figure that Rachel Reeves gets will be a shot in the arm. This is small fare. There are so many other problems the lady has. There are so many problems that the government has in delivering for Great Britain. They're not the only ones, by the way. I'm not picking on the UK government. But the fact of the matter is the growth agenda that this government got booked in, that got brought into Parliament into a tide of power, where it hasn't really happened.
Yeah.
There's been lots of questions about Rachel Reeves. This figure is a slight bit of solace for a lady who could be getting private estimates from the OBR at the moment, which is downgrading our productivity and upgrading the amount of money she needs to meet her fiscal rules.
I think you don't have to look any further than the job creation environment that we're struggling to create jobs here in the UK. And I think Rachel Reeves is going to try to make the case that all of this investment coming from U.S. companies that came through, announced just in the last couple of weeks, is going to significantly improve the growth picture. But whether that's actually going to transpire, whether that's actually going to convince the UK's fiscal watchdog that it's going to change the growth picture, remains to be seen. Clearly, she's under huge pressure. Speculation is mounting that she's going to have to go back on the Labour Party's pledge to raise taxes in November.
Let me just follow up. And the data of I think you're alluding to the last 24 hours, that there is a slump in jobs vacancies, and that is we look at the jolts all the time in the United States, and it's the same thing here in the UK as well. If there aren't a pool of vacancies, then that is a very worrying sign. And I have to say, if you've been watching this channel, you'd have seen James Reed of Reed Consultancy, Reed Recruitment as well, saying exactly that point. He's calling it a jobs drought, which is incredibly worrying. Anyway, let's move on.
Well, Keir Starmer is going to use his speech today at the Labour Party's conference to say Britain is at a fork in the road and must choose between decency and division. The Prime Minister is expected to warn of decisions that are, quote, not cost-free or easy, and describe what he calls the path of renewal as difficult and long. Chancellor Rachel Reeves used her conference speech to warn of more difficult choices in November's budget, saying the party must remain committed to fiscal discipline.
There are still people who peddle the idea that we could just abandon economic responsibility and cast off any constraints on spending. They are wrong. Dangerously so. There is nothing progressive, nothing Labour, about government using 1 in every £10 of public money it spends on financing debt interest. Billions of pounds every single year going towards repaying debt racked up by the Tories, paid to overseas hedge funds and investors. That's not how I want to spend public money. In the months ahead, we will face further tests, with the choices to come made all the harder by harsh global headwinds and the long-term damage done to our country, which is becoming ever clearer.
Ritika, I think for the business community that's watching this program, the key question for the Chancellor is what she delivers on the tax front come November 26. Speculation seems to be mounting that she's going to have no choice but to go back on the Labour Party's pledges not to raise taxes. What are the rumblings you're hearing? And flesh out for us what the Chancellor said in her speech yesterday.
Yes, Juliana, that has certainly been what has grabbed the headlines, this speculation of tax rises in the autumn budget and whether the Labour Party is going to have to break its manifesto pledge and raise some of those taxes on working people from the income tax to VAT. And we didn't get 100% clarity on that. Rachel Reeves gave her long-awaited speech. There were few details on where the axe might fall when it came to taxes, but we know that she is facing a potential black hole. I've heard estimates of anywhere from £20 billion to even £50 billion, and the OBR will be giving their assessment, we know, on that on Friday. Earlier I did speak to Darren Jones, the Chief Secretary to the Prime Minister, Wes Streeting, the Health Secretary, and Pat McFadden, the Work and Pension Secretary. This is what they had to say in reaction to her speech. Take a listen.
It showed the same steel, the same courage that's characterised Rachel's time as Chancellor, dealing with the dire economic and fiscal inheritance we had, the need to get our economy back onto a firmer footing. But it also showed real vision, optimism and hope. And it spelled out very clearly whose side the Labour Party is on. And, you know, one of the challenges we've got in this country at the moment is the level of cynicism and the belief that politicians are all the same, we're all the same. And, you know, she just set out all of the choices we are making that a Conservative government would never make.
I thought she was superb. It's a really powerful message from the Chancellor. It's not just her message, it's a message for the whole government about the priorities that we have, the decisions we're taking, and perhaps most importantly, who we have in mind when we take those decisions, whether it's the person waiting for NHS treatment, the young unemployed person who hasn't got a job, or the person working in British industry in critical sectors like steel or automotive, where we've stepped in to support British manufacturing.
But what about the threat from Reform UK? We heard Chancellor mentioning that in a speech.
Yeah, look, we have to face up to that. I was a campaign coordinator at the last election, and I said within days of it, we would be facing a different opponent on the right next time. I think what it really comes down to is a fight between opportunity and grievance, and I'm very happy to stand on the side of opportunity rather than grievance.
I thought that was a brilliant speech, talking about the renewal of Britain, building on all of the brilliant work we've done in our first year in government. Do you think the business community believes it? Do you think they're assured? Yeah, investment in public infrastructure, in R&D, helping people to get onto the skills, out of unemployment as young people. I think all of that is exactly what the labour market needs.
So let's fast forward to today, because it is day 3 of the Labour Party conference here in Liverpool, and it is now the Prime Minister Keir Starmer's turn to take the mic, and he's expected to say that Britain lies at the fork of the road between renewal or decline, and we know Renew Britain is a new slogan for them as well, but it is a tough backdrop for him going into it. I mean, there was one poll showing that he's actually the least popular Prime Minister on record. We know he has a potential leadership challenge from the Greater Manchester Mayor Andy Burnham. There was a YouGov poll that actually said that 2/3 of Labour members would back Burnham over Keir Starmer as the Labour leader. So Starmer needs to convince his party that he is indeed the man for the job, all the while fending off the threat from Reform UK, because Keir Starmer might be the Prime Minister in this party conference, but who knows about the next one.
Ritika, we know how this works. The party faithful give a rousing response to Keir Starmer. But the fact of the matter is we know the knives are out within the party in certain quarters for him. And it was interesting you referring to Andy Burnham there as well, who may or may not make a challenge at some stage, but is keeping his powder dry at the moment. I really care about what business thinks as well, though, because these are the ladies and gentlemen who have to deal with whatever fallout comes from the government enacting its plan or failing to enact its plan. And quite frankly, the business community I've been speaking to, mostly off camera, but sometimes on camera, are admitting they are dumbstruck with just how difficult it is to get the government to do the right thing at the moment. We've got to wait. We've got to wait till the end of November to find out what Rachel Reeves is finally going to do to try and get her plan back on track as well. What is business saying to you in Liverpool?
Yeah, business is just not liking all of this uncertainty, because there's unintended consequences of that. It means that they don't spend, they don't invest, they don't hire. They've already been hit by those taxes in April, the rise in the national insurance contributions. They've had a hike in the national minimum wage. So what they're saying is that they don't want any further tax rises, and they are concerned that if Labour has to stick to that manifesto pledge, that it means that they're the ones who are going to come under the knife again. So that is the risk for businesses. They don't want any more taxes on them. And again, it's that idea of the trickle-down effects. I mean, that again with investment and employment, and how that has ramifications for the economy too.
That's very interesting. Well, look, thank you very much indeed for that, Nicole. We're all on tenterhooks ahead of that late November budget. Excellent. Right, let us move on. Juliana.
We're going to hear from the UK Business and Trade Secretary Peter Kyle later today. You don't want to miss that conversation at 9:20 London time. Also, you can catch Keir Starmer's speech in full from 2 p.m. this afternoon. We're going to be posting it on our CNBC International Live YouTube page, so check it out there. Now, in terms of markets, yesterday we saw U.S. equities advance over the course of the session. All three of the majors ended higher. For the month, we've actually got the NASDAQ up more than 5%, leading the charge for the U.S. market overall. As for Asian trade overnight, a bit more of a mixed picture. We got some data out of China overnight. Chinese factory activity improving in the month of August, but still in contraction territory. It's actually contracted now for the 6th straight month. Despite that, we've got gains in the China market. Shanghai Composite up by about 0.4%. The Hang Seng also trading higher, but some red on the board for the Japanese and Korean markets. As for Europe, here's the early indication. Futures are pointing to a mixed and muted start here in Europe. This follows a muted gains for the Stock 600 yesterday. It rose about 0.2%, the second positive session in a row. And just for comparison to that NASDAQ figure I gave you, gaining more than 5% over the course of the month of September, the Stock 600 up about 1%.
Yeah, I'll do some more boards in a minute, but unbelievable moves. I mean, look at the NASDAQ. Was it 5.3% higher in the month? Tech up 6.3 on the month as well. So many of these trades are going so right for those people who have the herd mentality. There's no point in taking an outlier. There's no point in diversifying. There's no point in taking a risk on Europe at the moment, because the old trade that has worked so well for the last couple of years is crushing it as well.
Well,
until it doesn't.
Exactly.
And that's what my worry is as well, that it's gone back to the future, or futures, I don't know, whatever way around it is. But everyone's putting on the old trade and are happy as Larry. But are there warning signs out there? Are there warning signs from First Brand? Are there warning signs from JD Vance about the shutdown as well? About the fiscal position that the Democrats are a little bit concerned about? But to be fair, they didn't do any better when they were in government either, by the way. So this is not a political point as well. Are there warning signs about the valuation of OpenAI and Nvidia and others as well? It seems the market is stunningly glib, but is it? And that's why I think when you look at things like the gold price, it really is illuminate. How many record highs, I'll find the figure, has gold had this year? I think it's something like 36 record highs, excuse me, licking my fingers, 36 record highs so far this year, at its highest level since inception as well. Month to date is up 9.6%, up 16% for the quarter as well. If that isn't speaking volumes about people's concern about the rest of the trade, I don't know what is.
Well, clearly there is concern and mounting concern that we could be in bubble territory here, signs of froth in the market, which is why the pain trade is higher to some extent. But also, we have seen investors burned earlier this year who were too bearish the market. And so now you've got this phenomenon of the reluctantly bullish investor, which I think describes the bulk of the institutional community right now. They're continuing to invest in the market. They're putting risk on the table, but not because they don't believe we're in bubble territory, simply because the bearish trade hasn't worked.
We all know how this works. Momentum trumps everything until it doesn't, until you're the last man or woman standing as well. You know, the market can retain its irrational exuberance longer than I can remain with money in my pocket if I'm a bear, or other adages are better than that as well. There are other things that are performing. I mean, take a look at Spain, for instance, here in Europe as well, having a really strong performance. Great chart, Jordan. Thank you very much for that one. 9.5% higher in the quarter as well. So some European equities are doing incredibly well. Take a look at ASML. This is Europe's most valuable company. What do? It's a word that should never be used on telly. Lithography machines. Lithography machines. They're the ones who make the lithography machines that are so important. SAP, 276 billion as well. So ASML replacing SAP as the largest company by market cap in the third quarter. Let's take a look at the UK's most valuable company now as well. And they've got their own problems right at the top. They've got problems with what is going to be the dynamic of the company going forward. It's HSBC as well, who have got a chairman, Mr. Tucker, who's been immensely successful, who is leaving, and they're only replacing him with an interim, which is interesting given the fact that we knew he was going months and months ago. So a bit of an issue for HSBC. AstraZeneca, which has been so topical as of late, the CEO, Sir Pascal Soriot, is the leader there. They are valued at 171 billion pounds sterling. Right, let's take a look at the top performing sectors in Europe over the last quarter. And basic resources, banks, really the absolute standout. How many times have you lot out there been told banks were undervalued and are still undervalued compared to their US peers? I think that's unambiguous. But the question is, have they now closed the gap to reasonable levels as well? Because you and I all remember when they were trading at 0.3, 0.4, 0.5 price to book. Now they're trading at 0.6, 0.7 price to book. The question is if that has gone far enough as well. And I will just show you gold as well, because it's had the best month in 14 years. What is that telling you? What is it telling you? Is it telling you it's a great thematic own? Or is it telling you there is a tactical trade rushing into the product? I think you could probably make a good argument for both as well. But look at that move there. Quite extraordinary.
Coming up on the show, the U.S. barrels towards a partial government shutdown after talks failed to yield an agreement. We'll discuss. Plus, the ball is in Hamas's court as Israel backs Trump's plan to end the war in Gaza. We'll have the latest from the region next. And we'll cross back over to Liverpool, where Ritika will be joined by the U.K. Secretary of State for Business and Trade. That conversation coming up at 9:20 London time. Welcome back to the program. The U.S. is headed for a shutdown in less than 24 hours, according to Vice President J.D. Vance, who told reporters Democrats, quote, won't do the right thing after a high-stakes meeting. NBC News' Ryan Nobles filed this report.
Just a little more than 24 hours from a partial federal government shutdown, tonight congressional leaders and President Trump appear no closer to striking a deal to keep the government open. After a high-stakes White House meeting, both sides emerging, pointing fingers.
I think we're headed to a shutdown because the Democrats won't do the right thing.
Their bill has not one iota of Democratic input. That is never how we've done this before.
House Republicans already passed a spending bill to keep the government open, but so far cannot get enough Democratic votes to pass it through the Senate. Republicans blaming top Senate Democrat Chuck Schumer, saying he won't support the bill to please the Democratic base.
You don't put a gun to the American people's head and say, unless you do exactly what Senate and House Democrats want you to do, we're going to shut down your government.
Noting 6 months ago, Schumer voted for a similar spending bill, known as a CR, to keep the government open.
While the CR bill is very bad, the potential for a shutdown has consequences for America that are much, much worse.
But Democrats accuse Republicans of not being serious about negotiating, warning the GOP will pay a political price.
Republicans control the House and the Senate, and as a Republican president. If the government shuts down, it's because Republicans want to shut the government down.
If there's a shutdown, Social Security, Medicare, Medicaid payments, and VA benefits would continue. And essential workers like active duty military and air traffic controllers stay on the job. But national parks could close, and many federal workers, including at the IRS, could go without pay.
Can't go to the grocery store and say, well, there's a bill that was passed and I'll get paid and I'll come back and pay you for these groceries.
Okay, meanwhile, the US President Donald Trump has unveiled a 20-point plan backed by the Israeli Prime Minister Benjamin Netanyahu to end the war in Gaza, saying a deal is very close. Hamas is yet to respond to the proposal, which would start with an immediate ceasefire and the release of all hostages. Trump said Israel would have his full backing to continue its military operations if Hamas does not agree to the deal. Dan, you have been a brilliant point person on this story ever since the devastating attacks a couple of years ago. Look, there are so many points to this plan as well, but I can't believe it would have got to this stage without a form of buy-in from the Middle Eastern powers themselves, let alone, of course, what Israel and US has to say. Tell me about the Middle Eastern powers, the key nations in the Middle East, and how they are approaching this 20-point plan.
Oh, well, Steve, first, thank you so much. And yes, you're exactly right. This deal has come as somewhat of a surprise. It seems to have been pulled together in a very last-minute fashion. But at the same time as well, President Donald Trump really talking up what he calls a real chance for peace in the Middle East after meeting with Israel's Prime Minister Benjamin Netanyahu at the White House. The two leaders unveiling this 20-point roadmap to end the war in Gaza. Basically, it starts with an immediate ceasefire. Hamas would have 72 hours to release all remaining hostages, and then that would be in exchange for a phased Israeli withdrawal. What that looks like, the timeline on that, still unclear at this point. Here's what both leaders said when they made this joint announcement earlier. Listen.
Under the plan, Arab and Muslim countries have committed, and in writing in many cases, but I actually would take their word for it. The people I mentioned, I'd take their word for it, to demilitarize Gaza, and that's quickly. Decommission the military capabilities of Hamas and all other terror organizations. Do that immediately. And we're relying on the countries that I named and others to deal with Hamas. And I'm hearing that Hamas wants to get this done too, and that's a good thing.
We're taking a critical step towards both ending the war in Gaza and setting the stage for dramatically advancing peace in the Middle East. And I think beyond the Middle East, in very important Muslim countries. I support your plan to end the war in Gaza, which achieves our war aims.
But this announcement also comes against the backdrop of strain. What we know is that Trump has warned he will not allow Israel to annex the occupied West Bank and has also criticized that Israeli strike in Qatar that killed a Qatari national. Also, it prompted what was a very rare apology from Netanyahu as well after we saw a trilateral meeting taking place between Trump, Netanyahu and Qatar's Prime Minister as well. You'll also recall that just days before all of this unfolded, we saw Netanyahu vowing to finish the job in Gaza during that UN address. And of course, at the same time, a walkout taking place among dozens of delegates who were listening into that speech as well. And then at the same time, too, Trump also pitching this peace plan to the Arab states, claiming it's been positively received. We have seen some early reaction to this, but nothing really concrete beyond just words of acknowledgement. And there are also sources that say Hamas has not actually seen this proposal either. So the big question at this point is whether or not this is a credible agreement and, of course, the timeline on exactly when it could be taking place as well.
Dan, I'm going to ask you a very dumb question, but I want to know what you think of the answer. And that is, what is Iran going to think about this one as well? Because Iran is the key backer of the Houthis, of Hezbollah, of Hamas as well. And if you don't get Iran to buy into this kind of plan, the same problems, whether it's Hamas or another organization or another splinter or what have you, is going to come back time and time again. Do we have any idea whether this is going to be tied to a wider deal with Iran about them and their place in the Middle East as well? Because I can't help thinking, unless you get every party on board, the same problems are going to evolve again, whether it's Hamas or another named group.
It's a good point. And I think you also have to wonder, during this address between Trump and Netanyahu, we saw them floating the idea of the Abraham Accords actually being extended to include Iran. I mean, I can tell you on the ground, the reality is that is still a very, very long way off at this point, if it is even possible. Israel sees Iran as its #1 enemy. And inside Tehran, of course, there is a lot of hatred towards Israel as well. It's going to take a long time to fix that relationship, if it's even possible. And at the same time as well, we've just seen the snapback sanctions coming into effect as well, which means that Iran and its economy are increasingly isolated. Perhaps it could be incentivized to make some kind of arrangement to halt this aggression against Israel, and of course, Israel halting aggression in return. But it seems as if that type of peace is still a long way off at this point.
Dan, thank you so much for the coverage. Let's turn back to markets. We are about half an hour or so away from the European market open after another decent day yesterday. Stoxx 600 managed to add another 0.2%. This morning, we're looking at a mixed start to trade, a bit of a pullback for the FTSE 100 and the Xetra DAX. We'll be right back.